Welcome to XM.com for today's daily market comment by Rafi Boyajian. I'm Cristina Marujos. Simmering tensions over Ukraine continue to keep investors on edge at the start of the new trading week, even as hopes of a peaceful resolution for the crisis were kept alive by a last-ditch effort by France. The French President Emmanuel Macron has reportedly persuaded the US and Russian leaders to hold a summit to prevent the breakout of an all-out war in Ukraine. However, while both US President Joe Biden and Russian President Vladimir Putin have agreed in principle, the Kremlin is downplaying the prospect of an imminent meeting. The latest developments suggest the market's rollercoaster ride is far from being over just yet. Some market participants have already started to question whether central banks would be able to proceed with their plans to remove stimulus should Russia invade Ukraine. Though in reality, policymakers may have no choice but to slam on the brakes even harder if an invasion triggers Russian sanctions, pushing energy prices even higher. Gold has been on a roll this month, briefly hitting the $1,900 an ounce mark earlier today for the first time since June 2021. The precious metal is currently trading slightly below the $1,900 level, following the news that there may yet be a diplomatic way out of the Ukraine standoff. However, the fact that the pullbacks in bullion prices on positive headlines have not been as great as the gains from fresh escalations can only imply that investors are becoming increasingly worried about the situation. Meanwhile, in the currency markets, the euro was enjoying a strong bump up from the slight easing in Ukraine frictions. The single currency was further lifted from upbeat flash PMI numbers out of the Eurozone today that showed growth perked up more sharply than expected in February, hitting the fastest in 8 months. The risk-sensitive Aussie and Kiwi were the other big beneficiaries from today's brightened mood, which weighed on the safe haven US dollar and Japanese yen, though not so much on the Swiss franc. The dollar index has started the week on the back foot, skidding by about 0.25%. Aside from the fresh hopes of war being averted by a possible Biden-Putin summit, the dollar has been somewhat struggling lately from tempered expectations that the Federal Reserve will hike rates by 50 basis points in March. This was a daily market comment here at XM.com. Have a great week.